This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Middle of the week, it's a Wednesday morning. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema is with us here on the program today. Guys, hi, morning.
Hi, good morning. First signs of nervousness in the global markets yesterday.
Oh, absolutely. First signs. Jitters maybe, but we need more confirmation about which way things are going to go. So let's actually kick off exactly there. I'm going to start not with Wall Street, but what happened in yesterday's session. So the Nifty ended meaningfully off the high point of the day. And many are pointing to whether, the pattern which started all the way from the lows of March is now coming to fruition, is coming to finally some sort of a completion. So that is point number one. Almost 60 points off by close, and we left off at about 18,343 or so. Now, the question is, what happens from here on? Is the momentum starting to flag? And I think the answer to that perhaps will depend a little bit on the emerging global setup as well. And let's come to Wall Street now. So US stocks, for the first time in many weeks, started to show some signs of concern. You can say that they're reacting finally to the approaching deadline, which is perhaps on the 1st of June. But yesterday was the first time we saw any signs of nervousness. In the last couple of hours, the U.S. market sold off. The S&P was down about 1.25. The Nasdaq was down an equal measure as well. Now, on the S&P, the daily momentum and RSI, which is the relative strength index, are starting to see evidence of a bearish divergence. This is a time-tested indicator. It's a very simple indicator, but it's a time-tested indicator, and it works very well in terms of market turns. And are we starting to see something out there in the US as well, which suggests that maybe on the S&P especially, and even on the Nasdaq, which of course is the bigger outperformer, we start to see some profit-taking emerge over the next couple of days. So I think, both from an India setup and perhaps from a Wall Street, I would say more from a Wall Street setup rather than, what we've seen here yesterday, because it's just one day and the market ended higher, even though it was off the high. I think we need to be a little watchful. Now, hopping back to the Nifty, on the Nifty, I think you need to see a close below the 20-day moving average to confirm any sort of reversal. And unless and until you see that on close, I don't think you can really say that just based off of one session intraday what happened, that things are turning or anything of that sort. The 20-day for the Nifty stands at 18,172, and we're about 150 points away. You need to see a close below, not just an intraday breach. We've seen that last week, and the market came right back. Now, and below the 20-day, the low that we saw, the swing low that we saw of 18,060 will be the final confirmation that perhaps the uptrend is coming to an end. On the way up, the high of 18,459 will be the near-term level to take out. Only that will confirm that perhaps higher levels are coming. The Bank Nifty has been in a congestion zone for the last 3 or 4 trading sessions now. It tried to take that out yesterday, but it did not make a higher high. On the Bank Nifty as well, only a close above the prior high, which is 44,151, which is also pretty much the all-time high, will confirm further upsides. That's been pretty clear for a while. And in the way down, the 20-day for the Bank Nifty stands at 43,453, and that's a level which should hold. You basically, both on the Nifty and the Bank Nifty, should hold the 20-day moving average as a bit of a trailing reversal level, a trailing stop, a trailing reversal level, if you're trading these markets right now. But on a day like today, given what we've seen in the US markets, given the slight amount of shakeout that we saw intraday in India as well, it perhaps makes sense to not be aggressive, to stay out, let the market tell you what it wants to do. There is this debt issue as well in the US, and the deadline is approaching. If it is indeed the 1st of June, it's always gotten done. But the question is, if you're trading, it's not about always, and it's about when, it's about the next move, it's about the next day. And in that sense, you want to be careful out there. The SGX is indicative of a 75, 76 odd point lower start, 18,285. Reema.
So US had its worst session since 2nd of May.
Yeah.
So for the last 2 weeks, markets have been going on with the hope that, eventually it's going to get resolved. But yesterday we had the Republican Speaker, Kevin McCarthy, says that as of now, no more negotiations or meetings are planned to resolve this debt impasse. So that's, shaken sentiment a bit. There is a bit of risk off across the Asian market screen. So Hang Seng, China, Japanese markets, all of them are trading with a cut in excess of 1%. So the Asian market screen is firmly lower, and the SGX Nifty is currently down close to about 75 points. The futures is indicating the start will be below 18,300. That said, looking at the domestic cues, the earnings which came overnight, at least some of the big boys, was not as bad. So in fact, we had a positive surprise coming in from NMDC. The margins were ahead of what the street was anticipating. Biocon's numbers look pretty healthy. Ashok Leyland has clocked in an operational beat. Margins are a good 200 basis points above what the street was anticipating, and an improvement on a year-on-year basis. Amara Raja has clocked in a pretty good showing, 380 basis points year-on-year improvement in margin. Dixon has had a solid quarter. There have been a few misses like Metro Brands, where the profits came under pressure, but largely the earnings picture overnight has been positive. What will you watch out for today? You've got numbers from Hindalco, so that's the only Nifty company reporting numbers today, but you've got Cummins India, Nalco India Cements reporting numbers. And finally, on the global front, the minutes of the 2nd of May, 2nd and 3rd May FOMC meeting, the minutes will be out. So investors will be tracking that very closely, because you will get insights into what will happen in the June meeting. Will they go ahead and raise rates, or will they pause? So that's going to be one of the big data points to track today. But yesterday, Nigel, for the second day in a row, both the FIs and the DIs bought in the cash market.
Well, indeed. But the FI buying has come down a little bit, right, in comparison to what they're doing. And yesterday, I think there was a technical factor that played out. That's the reason that the Nifty ended at the low point of the day, because you pull up the Nifty Financial Services Index and you pull up the Nifty Bank. Both of them saw a sharp downtick in the last 30 minutes. So that's expiry-related factor that plays out. So that's good to see the Nifty Financial Services expiry that we ended lower. Now, the bulls, well, it appears they require a bigger trigger to get past that 18,450 to around 18,500 odd mark. Yesterday, you're talking about the knockout punch or the finisher. The finisher is missing, actually, cricketing parlance for the Nifty, at least as of now, because we're getting close to around 18,450, but we're not getting past that. On the downside, though, 18,250, I think that's the line in sand for today itself. And maybe the bulls with a bit of a stop loss, a 50, 60 point stop loss, maybe they'll fancy their chances at around 18,250. Let's tell you why. Yesterday, the FIs, they added more longs in short positioning, close to around 4 longs for every one short is what they added. And now the long short positioning is at around 50% apiece. The options data, that's giving you a sense. Remember, tomorrow you have the big expiry. That's the monthly expiry that plays out. The 18,300 put, well, that added close to around 40 lakh shares. The 18,400 call as well, that as well added close to around 35 lakh shares. So given that both of them were most active in yesterday's trading session, and the premium was roughly around 40 to around 50 rupees on an average for the day, and the total open interest at both these two strikes is more than a crore. So you're getting your bit of a range that you're looking at, both the goalposts for the market, both of them 18,300, 18,400, more than a crore shares odd. So just plugging in the premiums and looking at the options data, 18,250 to around 18,460, that's the highest level we've seen in this series. That becomes the broadband. On the downside, given that the SGX Nifty is suggesting we're likely to pull back by 70 to around 80 points odd, I think this may not be such a bad thing. Yesterday, we came off close to around 80 points from the day's high. Today as well, if you open up with a cut of around 60, 70, 80 points odd, maybe with 18,250 around those levels, risk reward could favor the bulls. And if the market dips from there, then keep a 40, 50 point stop loss. You get stopped out on the downside, but maybe risk reward could favor the bulls in today's trading session from the day's low, that is.
Okay, well, 78 points lower on the SGX Nifty is what we have. Before we go any further, let's quickly tell you what's lined up here over the next 30 minutes or so on the program. Let's get you updates. We'll get you updates from global markets. Rajat Bhattacharya of Standard Chartered will join in to discuss the global trade setup. Our research team will come in and talk about the top stocks you need to keep on your radar, results and non-results. And Devin Choksi will discuss and have comment on many of those stocks and markets at 8:30 when he joins us.
On the macros, Indranil Sen Gupta of CLSA says the Australian Bureau of Meteorology has reported that El Nino risks are rising, with the oscillation index at minus 9.3, well below the threshold of minus 7. The question now is whether El Nino will develop by June to obstruct rain clouds from going to India. Indranil adds that El Nino could impact the southwest monsoon. That, in turn, would likely affect the autumn kharif harvest. He sees a likely 25 basis point downside risk to CLSA's 5.5% FY24 GDP growth forecast and a 20 basis point upside risk to the 5.2% inflation forecast for FY24. This could push the first rate cut from the RBI to December from October. Finally, he says the stock markets could react to this in the absence of other major factors.
Okay, let's get you some money market views as well. On the rupee, Kunal Sudani of Shinhan Bank says, hawkish Fed bets, risk-off mood allowed dollar index to remain firm despite pullback in yields. Cues on Fed's next move from today's FOMC minutes will be eyed. The Chinese yuan continues to weaken and exert pressure on the rupee. For the dollar INR, Kunal sees 82.7 to a dollar as a support and 83.1 to a dollar as a resistance.
On the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark traded in a range of 6.95 to 7.02%. The market reacted negatively to the smaller than anticipated RBI dividend, but the withdrawal of the 2,000 rupee note led to a fall in the mainly shorter-term tenor yields in anticipation of its positive impact on system liquidity. For the rest of the week, the market will be focused on the FOMC minutes and cues about the U.S. monetary policy cycle and domestic system liquidity. He expects the 10-year benchmark to trade in a range of 6.95 to 7.05%.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. But let's list out the stocks for you as of now. We have Ashok Leyland, Amara Raja, NMDC, Biocon, Sun Pharma, Bikaji, Dixon Technologies, and Mahindra CIE. They are stocks in the back of positive news flow. On the flip side, you have JSW Energy and Metro Brands that could be reacting to negative news flow.
Okay, well, that's the stock lineup that we are going to get for you in a bit from now. We've got a view from, the JP Morgan team on the US debt ceiling, and I just want to quickly put that out before we bring Rajat in. And this is what they say. We continue to be cautiously optimistic that discussions between President Biden and Speaker McCarthy will yield at least a partial deal to raise or suspend the debt ceiling. However, there is a growing risk as we approach the X date, which is basically around the 1st to early June, that this time could be different with a non-zero probability of technical default. According to them, a combination of a challenging political backdrop, sooner than expected early June X date, lack of alternatives if Congress fails to act, and sanguine equity positioning suggests an elevated risk of significant equity repricing if the X date is crossed without a debt ceiling resolution. There are still 8 days to go for that so-called X date.
But there are question marks on what the X date is, right? Janet Yellen has firmly been saying that it's 1st of June,
yeah.
But Republicans yesterday are saying that perhaps it's not 1st of June. It could be a week, 2 weeks, even after that.
Yeah.
So that's why it's called the X date and not, 1st of June.
Mota first week of June, right?
First week. First, second week, who knows?
Imagine for stocks you don't have a mota date. And you're talking about raising the debt ceiling, and there is a...
I read somewhere a quarter of the Americans will be impacted if, that debt ceiling is not raised because there's social security payments to be made, Medicare, so hospitals, nurses, all that is going to be impacted if this deal doesn't get through.
So that puts the odds in the favor of a deal getting done, and we have heard this, over the last, I think, the 10, 12 years that I've been covering.
I said on Monday, this is like a boy who cried wolf, right?
Yeah.
I mean, it's... actually, JP Morgan goes on to say that since 1960, this has been done 78 times. They've never defaulted.
Yeah.
78 times, right? It always feels like it's not going to get done.
Yeah,
but
and it gets done.
So I think important to remember that. But
so Janet Yellen said that since 1789, US has never defaulted and it shouldn't start now.
Absolutely. Well.